Just on the ECB and what you think the rate hiking cycle looks like and what the implication is for European sovereign debt, could you just give us a line? What do you think we're going to see unfold this year?
Yeah, good morning, Jeff. I think what we're hearing from various speeches and press interventions, media interviews, and so on, is a growing sense of maybe panic is a too strong word, but grave concern about inflation expectations thoroughly getting out of hand. So on this one, I would actually concur with the assessment of Holzman that you just mentioned. So I'm seeing 3 rate hikes this year as well, with the first one quite possibly actually in July already.
What changes then in the communication? Because so far, Christine Lagarde has insisted that it's a different kind of inflation that Europe is experiencing. It's not the same as the Anglo-Saxon economies. And consequently, because it isn't becoming embedded in higher wage demands, then we don't need to respond in the same way as the Fed or the Bank of England. Do you think that line makes sense?
Yeah, that was true for a long time. I think now this is a backward-looking statement. It is no longer a pure sort of supply-side issue where energy prices go up. If you look at all the components in the consumer basket, it's like almost every single, over 95% of all items are growing at an inflation rate above the inflation target. If you look at the five-year swaps, inflation expectations become unanchored in the capital markets as well. And if I speak to companies, but also to labor representatives, I think what you're just alluding to, the increase in wages, that's a question of time. So yes, the Eurozone is slightly behind sort of the pressures in the US and the UK, but that gives Frankfurt a good opportunity to learn from them and not make the same mistake of coming too late to the normalization cycle.
Moritz, if we talk about normalization a little bit further and what that looks like in Europe, slightly different elsewhere, as we've had that deposit rate in negative territory for so long. So clearly getting past zero would be a fairly momentous moment for Europe. But just how far could we see rates rise? What sort of terminal rate do you think we could be talking about in Europe, given we've been surprised about the conversation around the United States and just how far rates could go?
Yeah, I think we'll be surprised over here as well. I think when push comes to shove, the central bank's objective is pretty clear in Europe. It's having stable prices. And there's no dual mandate. And even if there was, unemployment in Europe is now at the lowest level since the introduction of the single currency. So the ECB has no choice but trying to win this game or this battle against inflation uprooting itself, and for that, I mean, for now, I'm expecting sort of interest rates at a year from now around maybe 1%. But what is the terminal rate? I think it might well have to go significantly higher than some market or most market participants currently expect. Nothing like 1980s or so, what people sometimes refer to as a blueprint. That's not going to happen. The world is too different today. But the big risk, of course, has always been over decades that central banks raise rates too late, too slowly. Inflation sort of moves out of control, and then they have to really lean against the wind very heavily, and in the process, very often creating a recession just to suppress demand and bring price increases back down. I'm afraid we're just on that road again. So there's no time to be lost, and I would be really hopeful that the ECB sort of takes action and signals to the market that they have taken this battle fully to heart, and that they're determined to do whatever it takes to win over inflation.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.